Thank you, unauthorized. You reminded me. All right, perfect. You guys can see my screen. Okay, let's start off with got it. Okay, let's start off with gold. We're gonna start off with gold. Okay, last week you guys would remember we marked out a few different scenarios, a few different things. Signing in on another device. Okay, I think that's Sade trying to sign in. So let's start off with gold. Last week you guys would remember we started with this level of imbalance here that we were waiting for gold to tap back into if overall it was bearish, but it hadn't. It wanted to come up and fill the daily level of supply. However, you guys might be asking, why did you not mark out the entire level of supply? Okay, and I would do that right now. Why? Because it failed a certain order block that we had. We're still overall bearish on gold. Let's make that very clear. Same as last week, okay? The last lower high from the downtrend that we're in right now, as you can see, price came up, retraced, so price came down, retraced, came up. That's the lower high, the first lower high, because this high is lower than that high. Price came down, changed character. It still hasn't come back up to fill. So price came down, retraced again, formed another lower high, because this high is now lower than that high. Price came down again, formed another lower high, which is right here, because this high is lower than that high. Price came down, formed another lower high. Now this high is lower than that high. Price has now breached these two levels right here, which is what? A change of character. So long term, we're bullish on gold, but short term, we're bearish. Why? Because once there's a change of character, price needs to come back and fill in inefficiencies. And the only inefficiency we can see right here is this level of imbalance. And this confirms our confluence because of the trendline liquidity that is being formed. Okay, there was an influx of buyers, influx of stop losses lying at this level of trend line right here. Okay. And what are retail traders and what are some traders taught? They're taught that, 3 taps on a trend line or 3 taps on support and resistance make something respected. It might give them profit, of course, but later on you have to understand, guys, these zones in the market become areas of liquidity. So in order for there to be a buyer in the market, there has to be a seller. And in order for there to be a seller in the market, there has to be a buyer. That transaction must take place. So now there's too many buyers. Sells need to come into the market in order for liquidity, in order for the market to have enough liquidity to move in the opposite direction. So we've got the change of character here on a daily time frame. Now we're waiting for the trendline liquidity to be swept. When will it be swept is the question we have to ask ourselves, and we must form a hypothesis as to why we are going to take sells. We are overall bearish until this level here gets broken. Because if this level gets broken now, okay, if this level gets broken, then maybe this price wants to shoot up straight away, fill in this inefficiency right here, okay? Fill in this level of imbalance before coming back down to fill in this one. However, if we don't get a break above this level, we are still bearish. And that's how you have to think. You have to think as an adaptive trader. Never marry your analysis. Always think, what if? If this happens, I am going to. Not, this has to happen. If this doesn't happen, it's rigged. No, you have to think as an adaptive trader. If you take a loss, make sure it's within reason. Less than 1% risk, correct risk management, so that you don't feel it in your heart. A lot of people, the reason why people become emotional traders is because they risk too much. Who told you to risk that much? Okay. So from my memory, let me just mute this Discord 1 second. From my memory, I can't remember too much if it was the 15-hour level of, there was an order block somewhere here or an imbalance that we marked out last week. I can't remember which one it was. I think it was this level of imbalance here. I think it was on a 15-hour or 12-hour time frame, something along the 11-hour maybe. So, anyways, there was this area of 11-hour imbalance right here. So price came tapped in. Bear in mind, you guys might say, "Oh yeah, but they got stopped out." No, if I come straight to the 1 hourly time frame, this is a recap, by the way. This is not analysis. This is a recap of last week's analysis. Price tapped in, and what happened? What happened? It gave you a trade straight away. Price tapped in to the 11-hour imbalance. This was the last higher low. Why? Because this low is higher than that low. Okay, so that was the change of character right there. Okay, that was change of character right there. We got a body close below this level. Okay, we got a body close, and sorry, that was a change of character right here. Price wicked below, but on a lower time frame, this wick is a body. Okay, wicks still count, but I personally like to use body changes of character because it just shows more momentum. So if I was to drop on a lower time frame, I would definitely see a body close below this. It gave you the change of character, and it gave you your last point of supply to enter the trade from right here. It gave you it. Boom. could have sold right here. Stop loss above. You would have already been in this trade. So the Asian high here, you would have been in it. So you would have had to hold through it. Holding through Asian highs isn't a problem. It's a problem on your prop firm account. If you're on a personal account, still hold the trade. So boom, right here, you could have taken profit at the Asian low. They gave you an Asian low right here. Although it's a 1 to 6, if I was to drop to the lower time frame, I could find a better trade right here, as in a better, more refined entry. Okay. So let's drop, for example, let's drop to the 15-minute. Does the 15-minute give us anything? Okay, potentially something like this. I might be able to find a supply level within here. Drop to the 10. Perfect. Straight away, what do you see? Straight away, literally. And you can get a better risk reward ratio like that. Price change character, came back up to tap into the 10-minute level of supply. Stop loss is above. Now watch the difference in your risk reward ratio. Watch the difference, yeah? Take profit at the Asian low here. 1 to 12. That's 12% made in one trade. Then it reversed. Okay. So that's why we say take profit at Asian lows or Asian highs. Take profit at Asian lows or Asian highs. That would have been 12% in one trade if you're risking 1%. So now that it's breached these levels, you have to understand. That's why I say if you watch the previous Zoom calls, your old entry will later on become liquidity, which is why you shouldn't hold for too long sometimes, okay? Unless you're like a position trader and you've got like a large stop loss. So now people say, oh my God, it's reversing on me. Look at the bigger time frame. Look at the bigger picture. On the daily time frame, what are we? This was an 11-hour area of imbalance. Okay, now it's invalid. It's giving you profit already. It gave you one trade. Delete the area of imbalance. And now mark out the entire area of supply. Daily supply. Right here. Now people might say, yeah, it's mitigated. It came right here and tapped it. But you have to understand, it can either tap, fill in 50%, or fill in the entire order block. You're still valid unless price, violates the area of supply / order block, whatever you call it. Okay? It's still valid. The moment we get a break above this level, we are still valid for sales to the downside. If we do not get a close above here, a wick doesn't count. Okay? If we don't get a close above here, sorry, a wick counts as well. I mean, because what does a wick mean? A wick means liquidity was taken for price to reverse back down. Because of this inefficiency right here. If a wick's above, that means it's taking liquidity and there's enough liquidity in the market to push the market back down. And then it comes for this trendline liquidity right here. Then there'll be enough money for the market to push back up to fill in this inefficiency over here. So you see, you have to become an adaptive trader. You have to paint these scenarios in your head. Can you guys see me? Thumbs up. Can you guys see me? Since I've been signed out. Sorry, did you sign me out? You guys can see me, yeah? Thumbs up. Can you see me? Okay, perfect. So look at it now. This is why trading is so beautiful, because now you're telling yourself, if this happens, I know what I'm gonna do. If this happens, I know what I'm gonna do. Do you see? So overall, same as last week. We're not changing our bias. We're still bearish on gold. Last week we said it was a bit unclear what gold wants to do. But now that it's tapped into this daily level of supply, we are bearish because last week it was a bit, basically, look, last week it was in an area where it was approaching the daily supply. It was approaching. It hadn't approached yet. Now we call this basically, this is what we mean when we say, once price is in your POI, monitor your pair. So now it's tapped in. So we're absolutely monitoring. We are absolutely monitoring. This is exactly what we mean. So now price is tapped in. Amazing. Next week, what we're looking for, some more distribution. We'll wait for price to show us his hands, give us a little UTAD, which it looks like it has, because obviously this is the daily time frame. If I go to the hourly, you can see Wyckoff distribution being perfectly formed. Okay, you might get a few more movements, one more maybe to the upside, and then change your character and you enter. We are valid for sales as long as it doesn't break above. If it breaks above, then we can say, okay, cool. Price is a bit bullish right now. We're still not going to take buys. Why? There's a lot of trendline liquidity, guys. There's a lot of trendline. It doesn't matter if you don't enter the trade the opposite direction after it stopped you out. Be patient. You will catch the trade. Just be very patient. Be patient. Your time will come. Okay. So that is the bias for gold so far. We are still waiting for this level of imbalance to get filled. And if that fails, we're waiting for this, they call this a triple bottom in retail trading. We're waiting for this to get taken out because it's basically just equal lows. Okay. As you can see, equal lows right here. right here, equal lows. And if you remember last week's Zoom call, we say this still counts as liquidity. Why? Because retail traders are taught to draw their support and resistance lines from body to wick, from body to wick, just like this. So they're probably thinking once price taps in, they are still valid as long as they don't get a break below this area. Okay, that's what they're thinking. So that is it for gold. Now let's take a look at Euro USD. Let's take a look at Euro USD. What can we see on Euro USD on a daily time frame? You guys should know by now, because the reason why I go over monthly, weekly, daily, etc., in depth in earlier Zoom calls is because a lot of people were new. So the new people, if you're not here from this Zoom call, you have to go back and watch the other Zoom calls so you understand analysis. Because usually I'll just go straight to the monthly or 3 month. I'll start from the 3 month. But the reason why I'm not doing that now is because we've done that last week. So don't think I'm just starting from the daily time frame. No, always start from the lower time, from the higher time frame. So now Euro USD 3 months. What are we bearish? Why? Price broke below this level here. Okay, gave us a, sorry, do that too big. Price broke below this level right here. It's given us a level of supply right here. So we could be bullish short term. We got another 3 month order block / level of demand in here. So price can accumulate within here. So now we want to mark it out and delete it as we go along. Monthly, what's it looking like? Okay. Not really much here, just more confirmation of what we already marked out on the 3 month. Weekly, what's the weekly looking like? Okay, lovely. Weekly, we got a weekly change of character right here. Because why? Price was in a downtrend, as you can see. Downtrend. We don't really use trend lines to show us the trend, but we use trend lines to show us where trend line liquidity lies in the market. We got a downtrend. Now we can delete the 3 month time frame region, and we can mark out the weekly level of demand right here. We can mark that out. Why? Because prices are a downtrend. Lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Just to reiterate for the new people, okay? Because look, once you're new, sometimes you have to hear things over and over again to understand it. No problem. I'm happy repeating myself. Over here, high, high. I'm not saying hi to you, by the way. High, 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 high. And then these are the lows, 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 and lows. So this high is lower than that high. That low is lower than that low. This high is lower than this high. This low is lower than that low. This high is lower than this high. That low is lower than that low. This high is lower than this high. That low is lower than that low. Sorry, that low is lower than that low. This high is lower than this high. That low is lower than that low. This high is lower than this high. That low is lower than that low. This high is lower than this high. Sorry, this high is lower than this high. That low is lower than that low. So now, when do we have a change in trend? Actually, the change of character is here. That's another one. That's just more confirmation. But this is the official change of character. Let me just delete all the circles, because by now you should have got it. You can just replay it, watch it over again from the recorded Zoom. So now that the last lower high was breached, if you guys went through the course in the break of structure versus change of character video, you would know that now this is when we are in for a reversal, potential reversal. So that is your change of character, change of character right here. And you take the trade from the order block that caused the impulse move, that caused the change of character, which is this level of demand right here. Of course, we're on a weekly time frame, so I'm not going to take it from a weekly time frame because it would offer us a stop loss of 260 pips, 250 pips, basically. We're not going to have a 250 pip stop loss. So we're going to wait for price to tap in, form some accumulation, change character again on the lower time frame, and then we enter for the best possible risk to reward ratio, right? So now we drop to the 3-day. What's the 3-day looking like? It's still, you know, people say, oh, the 3 days mitigated. No problem. On a weekly, it's not, which is another confluence as to why price could potentially tap in and accumulate even more. Let's look at the daily time frame. Daily time frame. Okay, perfect. An even cleaner one on the daily time frame. So now we can refine this even more. We can refine this. Okay, but what we want to do now is we want to keep it like that, so we know that's weekly. So we mark out this box as weekly demand, and we draw another box to show us that that is a daily demand. Because if you're waiting for accumulation, what can happen is the spring might tap into the daily, okay, and then react off of there. So we call this the daily demand. Like a daily demand. Okay. Perfect. So now some people say, okay, but I can find a level of demand right here. Why can't I just take the trade straight from this demand level? Number one, the stop loss is too big, but the correct answer is that is not the move that caused the change of character. Okay. Why? Because on a weekly time frame, we can see a huge bullish engulfing on a weekly time frame. Okay. That was the move that caused the change of character. That huge bullish engulfing right there. You see, my belly's rumbling. So now I'm waiting for price to tap back in here. Price tap back in here and to accumulate. So now let's drop from the daily to the 15-hour. 15-hour. And guys, once you reach these sort of levels, there's nothing you can really do. You just have to wait for price. You've got your analysis now. Now you have to wait for the market to actually start moving. 11-hour, we're searching even more and more. We're looking for more traps. So now we're saying, okay, cool. Once price taps into this level here, wait for demand to fail. Wait for demand to fail. Now, if you're away from your charts on that day, or you're at work, or you're at uni, wherever you may be, or if you're babysitting your kids, what you can do is you can set an alert right here. Set an alert right here. Sorry, below this first demand level here. And you can call this one Euro USD demand failed. Okay, 11-hour demand failed. So now you know, okay, your bias, your overall bullish bias is coming together. Your overall short-term bullish bias, basically. Short-term, but it's long-term. It's loads of pips away. Like, so if we're taking a trade from somewhere, and it's anywhere in this region, for example, up until here, it's like 2,000 pips away. So short-term, we're bearish. Long-term, we're bullish. So now, if you're getting about your day and you know that notification gets sent to your phone, you wait for this demand to fail. Once that demand has failed, you get a notification, and now you know it's time to enter buys soon. Okay, it's time to enter buys in the market soon. So then you just keep dropping time frames, 10-hour time frame. Okay, cool. Really and truly, you don't really, because the POI is so big, you can't really find a trade directly off of this anyway right now. Okay. So 7 hours. Okay, there's more reasons. Nice prints that we're getting. Wait for demand to fail. Okay, 6 hours. Okay, 5. Okay, 4. 3 hour. 2 hour. 1 hour. You always want to look to your left. Always look to your left to gather the most accurate recent data. Okay, some people look back too much. Don't look back too much. Look at the most recent data to your left. You only look back a lot on the high time frames. So over here, that's the hourly, right? Let's check the 45-minute. 45-minute. Okay, lovely. What do we have here? Level of demand. People are going to say, okay, there's the Asian low below it. Okay, we can see the Asian low. However, you have to understand overall, we are what? We are bearish. Overall, we are bearish. However, once it taps into the zone, we want to monitor it because it's already, mitigated this level here. It's already mitigated this level here and it flew up. Okay, it's already, look at that. That's perfection. Tapped into an order block straight and gave you what? This is what I'm trying to say about trading, man. Trading is amazing. Look at this. Price tapped into a 45-minute order block and gave you 1,000 pips. Ridiculous. Ridiculous. So going back to the point I was making, people say, okay, there's an Asian low right here. You are absolutely correct. However, In this, you have to be adaptive. You have to be adaptive. That's why I say don't marry your analysis. This is why we don't take trades directly from the order block. If we're scaling and scaling and scaling, we don't do that. We're waiting because there's a big POI. We understand, okay, cool. Asian low. I'm not taking a trade from here. I'm waiting for the price to tap in and accumulate. The spring and the change of character is going to validate if I'm taking this trade or not. So now it looks messy, right? It looks messy. I don't need to use this, the level of demand, because the alert is here to tell me now. The alert is here to tell me. Okay. All I need now, I can delete this order block here because I'm no longer valid. It's been mitigated. All I need now is my weekly level and my daily level of supply. Okay. This one I can even delete. I can delete this. There's an Asian low right here. So I can set another alert at the Asian low to say Euro USD, Asian low taken. Asian low taken. And this is why I say be an adaptive trader. A lot of guys get emotional when they are bullish on something or bearish on something and it goes the other way. Why? You put yourself through that because you didn't wait for price to show you its hands. You didn't wait for confirmation. Wait for confirmation. Let price tap in. Let price accumulate. What is the whole reason of Wyckoff accumulation and Wyckoff distribution? To wait for the final move to take place, the spring or the UTAD, that is the liquidity sweep. After the liquidity sweep, that's when the real move takes place. So if there's an Asian low here, why are you taking the trade directly? Wait, even if it gives you profit. And you took a trade from an Asian zone. You shouldn't have taken it. Why? Because then you're going against yourself. Because if that trade shows you profit now, psychologically in the back of your mind, you're going to say to yourself, okay, last time it worked for me, might work again. No. Then you have no methodology. You're just going based off of feelings. And that's what's going to be very detrimental to your trading. You have to focus on your psychology and make sure you're disciplined to the T and follow all of your rules. So we wait for price to tap in, accumulate. If it gives us a spring in the form of liquidation of this Asian low and it changes character and leaves us a clean order block, we take the trade straight away, all the way back up. If it just taps in here and it acts like it's respecting a level of demand, we're not taking it. We are absolutely not taking it. We're only going to trade what we see. So we're going to wait for spring, change the character, and then we take the trade. However, up until that level, you can sell. You can look for sells. Right now, there's an Asian high over here. There is an Asian high right here that needs to be taken. Right there. Another one over here. That's why I say we're waiting for price to drop. However, we understand liquidity. We understand liquidity. So price could potentially come and visit these areas and distribute even more. Price can even come up and take this last level here because you have to understand liquidity, guys. There are buyers and sellers all the way here. Buyers and sellers all the way here. Traders that trade support and resistance. Okay, look, let me just give you guys a live example. Okay, if I was to draw this as resistance, okay, the floor, as they call it, right? The floor and the ceiling right here. Floor and the ceiling. People are selling, buying, selling, buying, selling, buying, selling, buying. You guys are looking at this thinking, damn, raw, this is working. Why don't we trade this? Selling, buying, selling, stopped out. Selling, stopped out again. Selling, stopped out again. Selling, stopped out again. You see? So now, this major move to the downside, this impulse move to the downside, was a liquidation of all of these stop losses that were waiting here. Because there are buyers here that are waiting for this to go to the moon. What happens? Price comes, liquidity grab right here. So now who's still in the market? The people that were in the range from here. These people here, they're still in this market. So that liquidity grab needs to take place at some point. Also this one right here from the people that were early sellers. Okay. So that is why we are waiting for these points here to be taken from the market. So overall, that is my analysis for Euro USD. You can, like I said, if you want to sell short term, you got to wait for liquidity levels to be taken, change the character. So once liquidity levels are taken, they're taken in the form of Wyckoff. Okay, you have to understand that sometimes they're taken in the form of Wyckoff, and the last liquidity sweep is the UTAD. Okay, and you'll find that in most cases, if you just analyze the market very, very closely, on a daily time frame as well, we are approaching the daily level of supply right here, as you can see. Okay, on the lower time frames, like 15 hour, or let's say even 14 hour, 13 hour, you'll find something here. 12, 11, 11 hour. What can we see? 11 hour? Straight away. Price is approaching a level of supply. But those highs are there. And price has changed character over here, which is why we are bearish. What we say, we mark out the liquidity points just in case. Just in case. That was a change of character right there. As you can see, the previous Zoom calls we spoke about this. Once price changes character, let me just mark it out for the people that still want to see. Okay. What would happen here? You can see some sort of equal high has been generated right here. Okay. Sorry, the most accurate. Let me just go on hourly. Yeah, it's much more accurate here. Okay. It's a range. This entire range, you have to understand equal highs, equal lows, ranges. There are buyers and sellers over here. So what happens? Price pushes up, takes the liquidity from here. So now it's giving us a reason that price might want to distribute within a zone and drop back down. Okay. And drop back down, or take that liquidity and then drop back down, or take both and then drop back down. So that is my overall analysis for Euro USD. And now we are going to take some questions. I've done this Zoom call early today. So, because I've got a few stuff to do. I'm going to record it for you guys anyway. So yeah, let's take a few questions from the crowd. Let me allow you guys to unmute yourselves.
Yarimi.
Yes, my brother.
Man, how you doing? You good, yeah?
I'm all right, thank you, bro. How are you?
I'm good, I'm good. Can you hear me clearly though?
Yes, amazing, bro. What's your question, bro?
Okay, so you see I'm looking for a trade. I follow like a kind of step-by-step strategy. Where like I go to the higher time frame, find the higher time frame PY, and then when it taps in, to look for Wyckoff and change the character. But I've seen you analyze obviously from the monthly time frame and then just scaling down, looking for confluences, and but not following a step-by-step, just trading what you see for them. Instead of like a kind of step-by-step where you go from the monthly and then you mark our higher time frame PY. Because I've seen you not mark up the higher time frame PY straight away from like the monthly or the weekly.
When have you seen
my
me
question? On the previous Zoom call. I don't remember which one it was exactly.
Have you watched all of the Zoom calls?
Not all of them. I watched like 5 so far.
Yeah.
I don't remember exactly what Zoom call I saw that on.
Yeah, the reason why I do that, bro, is because sometimes it gets repetitive. So sometimes in the previous Zoom call, I've marked out the high time frame ones. So it's like once the students get to a certain level, they understand the lingo. So sometimes me repeating and opening a monthly and a 3-month chart again is basically what they heard last week. Okay. And obviously the markets move week to week. So sometimes we say, okay, remember what we said last week, guys? That happened on a monthly time frame.
I've seen you say that. Yeah, I've seen you say that.
Yeah, that's why sometimes I might not open it on a high time frame straight away because we spoke about it the previous week. So it's like episodes, basically. If you go through every week, you'll realize, okay, that week, last week, I said this week, this happened. And then we just follow up on basically what happened last week.
Okay, that makes sense. Yeah. So if I see like a bearish bias, for example, I'd have to look out for my higher time frame supply POI, for example.
Everything.
I wouldn't just find it later on.
Yes, exactly. There's a video in the course that's called The Strategy. That's exactly what you do. You follow the higher time frame, lower, wait for price to show its hands, change your character, Wyckoff distribution or accumulation, change your character, last point of supply, then you enter the market.
Okay. And why did you scale refine the higher time frame POI down to like the 18-minute time frame one time? Because I've heard people say, oh, the 4 hour or at least minimum the 1 hour,
Yeah, time frame. Because I believe that you have to put together pieces of the puzzle to build a hypothesis on what you want to do in the market, and it can happen on any time frame. I like to refine my stop losses. I like to refine my POIs to a realistic amount, so that I can have the smallest risk possible with the highest possible reward.
Okay, and then if it tapped into, let's say, a lower time frame POI, you'd obviously still look for Wyckoff. You wouldn't just enter off it. If
it depends. Because look, you have to understand. Sometimes you might open a chart where Wyckoff has already taken place. The last point of supply is called the last point of supply for a reason. We can take the trade directly off of it as long as it offers you a reasonable amount of stop loss, for example.
Okay, that makes sense.
Yeah.
Yeah. Okay.
So sometimes, imagine I've been off the charts Monday, Tuesday, Wednesday. Wyckoff was forming in those 3 days, I open a chart on Thursday, I'm already at the last point of supply. I can take the trade straight away.
Because you already saw the Wyckoff prior.
Yeah, it was formed. It's already been formed.
Okay, and then just the last thing I want to say quickly, past the daily time frame, your analysis now is basically just refining your higher time frame POI and looking for take profit targets like imbalances or areas of liquidity, I'm assuming, right?
Exactly that. Yeah, you're looking to build a hypothesis. Okay, are there any demands or supplies that might fail? Are there any retail traps? Are there any equal highs or equal lows? Is there any trend line liquidity? Is there any? Do you get what I'm trying to say?
Yeah.
And you're just adding to your confluences. Yeah.
Okay. Thank you.
No worries, bro. Anyone else got any questions, guys?
Yarimi, I got a question if you don't mind.
Yes, bro.
So is it all right if you could start looking for a point of interest from 4 hour and then up to like 1 hour instead of going all the way from like the monthly, then the weekly, then the daily?
If it was all right, it would have been in the course.
All right.
Yeah.
All right, thank you.
No worries, bro.
Hello, can you hear me?
Yes, bro.
Yeah, I got a quick question. So, you see with USD.
Yep.
So are you bullish on that? So you're looking for it to come into your demand and then buy it up?
Yeah.
So see how you've marked
long term though.
Yeah. Also short term, you're looking to sell down to the demand.
Yeah.
Okay. Because I was wondering, because sometimes when I'm like backtesting and stuff, I can see that I've got high time frame POY marked out, and like I'll be waiting for it to come into my high time POY, but I'll see a move up. Like I'll see, for example, if price is bullish already, and I can see it coming down, like I'm looking for sales, but high time frame wise, I'm bullish. So like I'm trying to counter trade. So like
you can counter trend as long as it's following your confluences. Like if it's taking liquidity, if it's changed character, formed Wyckoff, you can counter trend trade. You have to trade what you see at the end of the day, right? So if it's giving you all the reasons, don't hesitate, enter.
Yeah, that's perfect. That's what I wanted to know.
Yeah, no problem, bro. Any other questions, guys?
Yeah, I have a question.
What's going on?
You go first.
All right,
brother. Harris,
a quick one. The liquidity lines, like you said, it could reach the first one and then drop, or reach the second one and drop. In these situations, how can we think like?
In these situations, this is what makes an elite trader. In these situations, you sit on your hands. Sometimes no trading is trading. You have to understand that in these situations, this is where people will have FOMO, the fear of missing out. Okay? In these specific situations, people are thinking they're missing out on making money in the markets, when in reality, this is where liquidity is being generated. So once the liquidity has been taken, that's when you look to enter the market. If I was to tell you right now, you're driving a car in London, I tell you to go out at 4:59 to go to a restaurant, but you know there's going to be traffic 5 p.m. rush hour. Would you go at 4:59? Or if I gave you the same option to go at 1 p.m., would you go at 1 p.m.? You got 1 p.m., right? Why? Because there's less traffic. Same with this situation here. Right now, this is rush hour. The rush hour where all the retail traders, all the rubbish traders, everyone's entering the market because they think that they're going to miss out on money. Once rush hour is over, i.e. liquidity being taken, that's when the real move takes place and the road is clear for you to enter a trade. Does that make sense, bro?
Yeah, but like, are we waiting for Wyckoff here or?
Yeah, so right now, once it taps in, we're waiting for distribution. Okay. The distribution, remember guys, a lot of people forget that Wyckoff distribution is a process, or Wyckoff accumulation is a process. It's the liquidation of retail traders. Okay? So right now, once price distributes within a zone, the UTAD might be the UTAD might take out the first level of liquidity. Sorry, the upthrust might take out the first level of liquidity. The upthrust after distribution might take out the second level of liquidity. Then price changes character. Then it leaves behind an order block. Then you enter. Do you see? You have to wait for the entire schematic to play out. People say, oh, yeah, what should I do now? What do we do in this? Has Wyckoff played out? No. So what is there to wait for? You have to wait for it to happen, man. Let the markets breathe. Let the markets do its thing. The market has a heart. It has a routine. It wakes up. It goes to sleep. There's times it's calm. There's times it's active. You have to understand how the markets move and the market cycles. Does that make sense, bro?
Yes, bro. Thank you.
No problem.
All right, can you hear me?
Yes, brother.
Yeah, I had a question for something that you marked out on gold. You marked out like a daily supply zone, right? But like
Yep.
I had like a massive bit going down, but you just put the rectangle over just the bearish engulfing, the bullish engulfing, the bullish order block and the bearish one. So you kind of like ignored that wick that was going down with it. And it was like, yeah, okay, if you go to the gold, I think there's the one, yeah, I think it's that one there, yeah. If you zoom in, is it that one? Yeah, because you were talking about I don't know if it's that one. Is it that one? It's on the daily. If you go on the daily,
Yep.
I think it's the one to the left. Yeah, that one there. You see how you kind of like ignored the wick going down? But that,
Oh yeah, that's my bad.
are you allowed to do that?
What do you mean?
You see that one that all the way down below. You see, you marked out the rectangle, right?
Yeah,
But then
you're saying
there's like a,
why didn't I draw it like this?
yeah.
Yeah, the reason why I didn't draw it like this is because I saw another level. So that's the daily. Obviously, I started off like that. If you watched last week's Zoom call, we started off like that. We marked it out. But then when you scale in, you can obviously refine. So that's a
Okay,
refined area.
okay.
So if you look, for example, like, hold on, let me just
yeah,
show you.
yeah.
If you look at something like I think it was, let's check the 14 hour. 14, 12 hour.
That's a minute, I think.
Yeah, the reason why we drew it like this is because I think I adjusted it, to be honest with you, but there was a level of imbalance. Yeah, I think we spoke about last week, the imbalance from here. From here to here.
Okay, and
from here to here. That's why.
so
when you see big supply zones like that, you
yeah,
want to, like, if I even scale down to the 9 hour, we'll find something. 9 hour, 8 hour. We've done this in last week's Zoom call. That's why I'm going through it quickly. So rewatch that. So there was more supply zones. So for example, there was this supply zone right here. Okay. Once there's a wick above, I'll draw it like this because I know on a lower time frame that wick right there is still a supply zone. 6 hour, 5 hour, 4 hour. See, very clean supply zone.
Yeah. And you see, regarding you were talking about you're waiting for the whole schematic to play out for Wyckoff, yeah.
Yeah.
Let's just say I'm watching that Wyckoff player, I'm watching and it's about to start playing out, but then I'm thinking, okay, AR's here, BC is here, and then right now, even though I'm expecting like a UTAD to happen, a change of character happens. Does that mean like I'm still waiting for like the UTAD, or has it already happened before?
If
And
the
I just haven't
UTAD,
seen it.
so remember what confirms. So you have to understand that in that situation, if the UTAD is clear, okay,
yeah,
the UTAD will come in the form of taking liquidity from something. Either taking liquidity from early people. So someone might sell here, price goes up. People might sell again, price goes up again. People might sell again, price goes up again. People might sell again, price goes up again. That's the UTAD. And that UTAD is only confirmed if price breaks below this level, which will be the change of character. Price broke below this level here.
Oh.
So it only confirms once you get a change of character, and it's even more of a confirmation when you get a break of structure. Because what confirms Wyckoff is a break of structure.
Yeah. Because when I was doing some backtesting, I was marking out, okay, cool, the change of character happened, but then I think my problem was that I'd get taken out by the upthrust after distribution, and then it would happen again.
A big problem a lot of people have is they try and mark out Wyckoff as it's happening. Just watch it. Wait. Just watch it. Literally, just watch it. Or just set an alert, because usually what will happen is the upthrust after distribution will tap into your supply zone anyway, somewhere within your high time frame supply zone. So once it's at a certain level, just monitor it, wait for it to happen, wait for the change of character. Once you see price moving up, you should not be concerned about the UTAD. Just mark out the last higher low or lower high or higher low, depending on whatever trend you're in. Set an alert at that point and make the title price just change character. It will send it to your phone. Then you can come on your laptop, open the market and look at the market. Why are you wasting your time just watching Wyckoff all day? You're going to waste your whole day. Don't do that. Set your alerts, wait for price to change character. Once it change character and it comes back in, set your buy limits or your sell limits, or you can enter the market instantly with the instant execution, market execution. Yeah?
Yeah. Thank you, bro.
No problem, bro. Any other questions, guys?
Yeah, just a quick one, sorry. So when there's up thrust and then you have UTAD after,
Yeah.
does the UTAD have to exceed the previous up thrust? Because yesterday when I was doing back testing, it didn't, and then it produced a wick off distribution.
Yeah, the up thrust after distribution means that that is the last move for the
Yeah, of
distribution
course.
to be complete.
You know, that makes sense. Thank you. Just
No
double
problem.
check.
No problem, brother.
Just a quick.
Who am I speaking to? Who am I speaking to?
You can go first, I'll go after.
Hello?
All right, yeah. So yeah, Assalamu alaikum, Yarimi.
Listen, bro.
Bro, I've been doing back testing and I've been trading, and the reason I'm asking this question is about what's it called when you get stopped out due to spread? Yeah, that's the one. What's the best way to get around it?
Add a few extra pips, like 2 or 3 pips, to consider spread
Yeah.
whenever you're entering a trade.
Brother,
So, for example,
question,
imagine I'm trading like
yeah.
this, for example, yeah? Imagine I'm entering a sell from like somewhere here, and my stop loss is above here. Instead of making it right above here, let me just add a little bit, 2 extra pips just for spread. Do you see?
Yeah, I hear you.
Okay.
But our brother said today on the questions chat, if you take, so say you have an order block on TradingView, and I look on it on the MT4 app, apparently spreads basically 0 to none. Have you ever done that, or you straight from TradingView?
No, I obviously enter straight from MetaTrader. So
Okay,
basically, you have to understand that on the broker that you're trading with, sometimes, a lot of time it will, okay? But some candles might not look exactly the same. So what you have to do is, I like to go on like something like a 15-minute time frame. Say, for example, here.
Yeah.
If this area here, okay, as you can see, there's a straight, clean level right here. I would look for this candle. So on my MetaTrader, I'll be looking at TradingView. And over here, I'll be looking for those 3 bearish candles. 1, 2, 3. So I'm looking for those exact same 3 bearish candles on my MetaTrader. And then I will set my limits, or I would enter the trade as soon as price taps those exact candles here. Do you get it?
Yeah.
Because the prices might be different on MetaTrader, which can confuse you. So if you're, for example, if you got your price right here and you're saying, okay, cool, this is what from the side right here, over here, yeah? You're saying, I'm going to enter gold at 1858.03. So you're setting sell limits at 1858.03. But in reality, the MetaTrader prices are different. It might be 1858.01. And then you might miss a trade because of that. So always look at the candles and try and find the same candles on MetaTrader.
Yeah, no, I hear you. Because that's what he told me today. He said if you do what you just said now, you get way quality trades. You won't get stopped out as much.
Yeah, exactly.
Yeah, literally.
Yeah.
But yeah, thank you.
No problem, man. I appreciate it. Any other questions, guys?
Yeah, one last question.
Yeah.
Now you go first.
All right, so basically, once price hits my order block and I enter off the last point of supply, where can I place my take profit?
So, for example, in this situation here, price has formed wick of distribution. Okay, we got the last move up. Price came back down to fill the level of supply. Okay, you take profit at the Asian low. So you could have taken profit at this first Asian low right here. Okay.
Okay.
For a what? For a 1 to 9. And you take off 80% here, for example, and you let 20% run at the next Asian low for a 1 to 13, basically. So you look for
Thank
Asian
you very
lows.
much.
So when it comes to taking profit, you look for Asian lows, Asian highs, trend liquidity, equal highs, equal lows, supply levels, demand levels. That's where you want to take your profit. Always take it on the touch. Okay, on the touch. So when it comes to supply and demand levels, don't take your profit at the top of it, or at the top of demand, or at the top of a supply. Like, take it on the touch of the box, not inside the box. Just to confirm. You see?
Thank you.
No problem, brother.
I've got a question related to prop firms. Do you think we should go straight for 100K or maybe like go for
straight 100K?
Okay.
Yeah. The reason why, I explained it in one of the previous Zoom calls, you want to minimize all the psychological burdens. You want to trade with a clear mind. Because if you're trading a small account like a 10K, what's your drawdown on that? Your daily drawdown, 5%. What's 5% of 10K? 10% of 10K is what? £100.
Yeah.
So 10% of 10K is 1K, sorry, yeah. So you can't lose basically 5 bills. You can't lose £500. So now you're stressing, thinking, damn, you want to make big money, but you don't really have the capability to make big money because of your account balance. Whereas on 100K, your 1% risk is 1K. If you were to risk even less, 0.5%, what's that? £500. £500 stop loss. Nice. Elite risk management. Catch on 1 to 10, that's what? 5K. You just made 5K on a trade. Sorry, 2.5K on a trade.
All right, cool. Thank you.
Yeah. So you want to remove the burden.
Yarimi.
My maths all over the place, guys. I got kicked out of college twice. My bad. Yeah.
Yarimi.
Brother. Oh, sorry.
Yes, guys. Who's speaking?
Yeah,
Guys, when you call my name, I don't know who's
quick
speaking. So you
question.
got to
Yeah,
say who's
man,
speaking
man,
so I
man.
can see.
Man, I'm back.
Yes,
Just
bro.
for a quick question, yeah. From your experience, what's the lowest time frame to find the higher time frame POI? I'm not sure what I should do. You know what I'm saying? Like,
Doesn't matter.
the 4
Whatever you
hour,
see.
1 hour, some people say 30 minutes. Whatever you
Don't-
see.
Yeah, don't marry a time frame. Keep
Okay.
your options open. City boys.
So I can
Joking.
I can have multiple then. I can
Sorry?
have multiple POIs then.
No, you don't have multiple
Are you saying I can
POIs.
have multiple high time frame POIs
You
then,
have
like 3
one
or 2?
POI that you wait
That's
for
the cleanest.
distribution or accumulation within.
That's the cleanest.
Yeah, you have one POI that you wait for distribution or accumulation within. Or if you're in a situation where the schematic has played out in the market, you can take the trade directly. It depends on the circumstances, obviously.
Okay. I'll just experiment and it's a 4 hour, 1 hour, etc.
No. Just follow whatever you see, whatever gives you the cleanest areas. Don't stick
Okay,
to a
no
specific
worries.
time frame.
Okay, thank you.
Yeah, no problem, bro. Any
So,
other questions,
Ramadan,
guys?
I've got a question, bro.
Yes, bro.
Yes, brother. One, just to follow up on the, the MT4 prices when you trying to locate the, what's his name, the OB. Sometimes like the 7 minutes, I get like entries on the 7 or 8 or 9 minutes, and they're not available on MT4. So how do I deal with that?
That's why I said you look for the 15-minute candles or the 30-minute candles or the 1 hour candles. You look for that exact same candle from TradingView on your MetaTrader 4, and you take it from so go on like the 5-minute time frame, for example, and you look for the same 5-minute candles from the area you want to trade from, and you place your prices based on that.
Yeah, but I mean, like for example, I'm on TradingView. I find the clean OB on the 7 minutes or 8 minutes or 9 minutes.
Yeah, that's what I'm trying to say. You listen to my answer, bro. I'm saying like, if you go on the 5-minute time frame on TradingView,
yeah,
and you find the same candle that's on the 5-minute time frame on MetaTrader, because MetaTrader doesn't have 6 minute, 5 minute, 6 minute, 8 minute. You look for the 5-minute candle from TradingView. You look for the same one on your MetaTrader, and you set the price at that 5-minute candle that's on MetaTrader.
I see now. Yeah. I get it.
Yeah, you just want to find the same candle basically on your MetaTrader, and that's it, bro. Yeah.
Barakallah fiik. Thank you.
No problem, bro.
I've got a quick question here.
Yes, bro.
In my country, CES is MetaTrader. You can get MetaTrader on your phone. So I just got a quick question. What do you guys use? Because I've been using Rwanda. It's all right, but you've been mentioning MetaTrader like the whole meeting.
MetaTrader is the app. MetaTrader isn't a broker.
Yeah, I know, but I can't get it on App Store on that.
You saying you can't get it?
Nah, on App Store. On my phone, I can't get it.
You can or you can't?
You can't. I can't.
You can use a VPN.
Yeah.
Or you can go on the course. I think it's lesson 6.2 or something. You can use the web. You can use the web version, the internet version. You can just go on the internet and use it from the internet version. You don't have to have the app.
And I can do the same thing on my
same thing. It's the same thing, just an online version.
Yeah. Okay. Thanks.
Yeah, no problem, bro. Any other questions, guys, before we wrap it up?
Assalamu alaikum. I have a question.
Yep.
Yeah, bro. So I wanted to ask a question regarding working on your psychology.
Yeah.
How do you avoid keep on, like, for example, you've entered a trade. How do you avoid just keep looking at it back every 5 minutes, every 10 minutes? Because I have an issue where I'll set a trade and then I'll go back every 5-10 minutes, and I'll keep looking at the trade. Keep looking at the trade.
Look, you have to understand. As much as there's psychological reasons to avoid trading in trading, there are also psychological reasons to believe in your trade. You have to be confident. You have to develop yourself to be a confident trader that you believe in your analysis. You are a financial data analyst who makes decisions based off of what information the chart is showing you. You have to believe that and affirm it in your heart. Because if you don't believe that, you're going to become a timid trader where every single time you do an analysis and you see a few candles that look like they're going the opposite way, you're going to start backing out and being shook. You're going to start getting scared. You're going to become a scared little trader. You don't want to be that. Do you get what I'm trying to say? You want to become so confident in the analysis to the point where you can lock your phone, come back every 2 hours and check it. Like, that's what I do. Whenever I'm in a trade, I don't care if it's a loss, if it's a win, doesn't make a difference. Why? Because I'm following elite risk management. The only time I'll risk a bit more is if I've made a crazy amount for the day and I'm willing to risk like 10K or 5K, whatever. That's when I'll do like a little flip or I'll have fun. But for my trades, I don't mess around. I don't mess around with my risk management. Why do you feel emotional when you lose a trade? Because you lost too much. If I was to tell you you've got £100 in your bank and you lose £1, are you going to be stressed?
No.
So why is it that when you got 100K and you lose 1K, you're stressed? Because 1K, you're thinking, damn, people get paid 1K in a month.
Yeah, it's a lot.
But it's the same thing. It's the same thing as having £100 in your bank and losing £1.
Mm-hmm.
Do you get it? So the way to avoid this is to believe in your analysis, know that you are an elite trader, develop yourself and work on your mindset, work on your trading first and foremost and your psychology. And I would say check up on your trades every 1 hour or 2 hours. You have to do this. People try to use some nonsense excuse like, yeah, I'm just monitoring. No, you're not monitoring. You're scared and you're watching the chart so you can revenge trade if you get stopped out. That's not lie. Don't lie to yourself. Don't lie.
So for example,
So
when you got your
monitor
100,
the charts every 1 hour or 2 hours and do an activity. Like me, I like to go swimming. I go downstairs, go for a swim when I'm in a trade. By the time I come out, TP is hit, or I'm floating a profit, or I've got stopped out, whatever it is. But distract yourself with something productive so you don't feel like you wasted your day.
Like for example, like when you first passed your 100K,
Yeah.
Did you have that same mindset when you had like the demo account as well?
Bro, when I passed my first, this is what I'm trying to say to you. Me, I'll be honest, I don't care. I'm a risk taker within reason, within calculated risk. Like I know, like I've always thought big. My first 100K, I put 100 lots, bro. Who does that? Who does 100 lots on their first 100K prop firm exam? I was, you know what I mean? I'm trading 3-minute order blocks. Nice. Boom. 2 pips, stop loss, 3 pips. Like, these things are possible. I'm finding the craziest entries within the risk as well. Less than 1K risk. Like my first prop firm, 65K in the day, October 2021. Held the trade for 9 hours. Had almost like a couple hundred to my name. Why didn't I close at 20K or 25K or 30K or 40K? No. Psychologically, I wasn't even ask Saleh, like, although I got into a situation with that prop firm at the end, but ask Saleh, like, for that trade, I'm holding it for 9 hours. Saleh saying, yo, bro, that's 40K. Why are you not closing? So, Saleh, I'm a trader. I believe in my analysis. Just here and take profit. There's too much liquidity over there. Wait, be patient. Don't get attached to the money. I'm not attached to the money. I'm attached to my skill. I know I'm a skillful trader. I'm waiting for this to hit take profit. I'm locking my phone, putting it away. I'm in my mom's house. I'm in an office like that I've just made out of nothing, basically. Broke. But I'm here for my skill. I know, because imagine I close at 40K. Now I've created a habit. I've created a habit of closing early now. And that wouldn't have made me a profitable trader long term, because I've now got this baggage of a detrimental psychological trait with me, which is what? Closing out early. Because I'm attached to the money's worth, not the skill. Does that answer your question, bro?
Yeah, thank you, bro. Just want to let you know, bro, like last week, alhamdulillah, I passed my 100K. I started trading live last week. That's why
Both of them, yeah?
Yeah, I passed. Alhamdulillah.
Aye. Aye. What's your Discord at right now? You know we got to congratulate the peoples them. What's your Discord at right now?
MD.
Everyone wait. No one say anything. Wait for me to drop the message. Don't stop typing, guys. I can see you guys typing. Wait, relax. What's your Discord at, bro?
MDTC 2 2-2.
So you do people that message early, your message just gets deleted because you don't listen. And how long you been part of the course, bro?
Started when you first launched it, so back in June, is it, I think June, July?
Crazy.
Yeah.
We have a new funded trader, guys. Everybody show him love in that Discord. Let's go. Hey. Well done, my bro.
Thank you, my bro.
Well
Appreciate it.
done. Well done. What's some words of advice you would give to everybody watching right now, man, in terms of how you passed this? Psychologically, emotionally, maybe the days where your stop loss got hit.
I started back in 2020 when I first started retail trading. I joined a network marketing called Nexterize. I don't know if you've heard of it or not.
Yeah.
And yeah, they had a trading program, and that's when I first was introduced to trading. And I was taking on signals, and I was learning like retail methods, like RSI and all of that. And even though I was following signals and learning these retail methods, just hitting stop loss, because stop loss are huge. Like even though you're making profit, you're losing it the next day.
Yeah.
And it was literally for 2 years, just retail trading. But at one point I wanted to quit is because it was just like funding 5 bills, 1K, and then, you know, just getting dropped, like losing accounts. And then yeah, I come across your course, and bro, I'll be real with you, bro. I was broke. I didn't have the peas, bro. I had like 5 bills in my bank. I had, you know, it was either pay the rent, you know, pay the bills, or is it, you know, join Yarimi University. I didn't think back, bro. I got the funds, joined the course, and just put the hard work in. And at first, finished the course within a week, and just like back testing, going through the questions. I've been active as much in Discord, but it's just mainly me just grinding with me and the laptop. Literally been out of work for like a year, just non-stop grinding, bro. I've been broke. Didn't go to work, and just grinding, like sleepless nights and just making it happen. And I waited till like December, but I didn't have the P's to get funded to buy a prop firm. So I waited. Yeah, so then finally got the P's, then just went in, and then passed in 2 weeks. So yeah, man.
Amazing, bro. So how would you say the course has helped you, like, from how you were trading before?
Course,
like,
bro,
was there a moment when you was watching the course and something clicked? Like, was it?
Yeah, bro.
You
It
have
was
that
just
moment,
like
oh my god.
Yeah, it just took out all the nonsense. And it's just direct, bro. Like straight away, I understood it, and I just kept practicing. I was like, oh crap, this works. And you know, even though you're managing like that, you know, it's the risk management, because when you're a retail trader, it's like you're holding on to that trade for hours and hours on a minus, waiting for it to reverse, 50 pips stop loss, 100 pips stop loss. And then, you know, when you started talking about that 1%, I was like, how does that work? Because I always felt like the market's out there trying to stop hunt every individual. And I used to think, oh, this is not working because the markets are controlling us. But then it was like, wow, it works, because it's all practice, bro. That's what it is. It's all practice, like you said, just risking that 1%, just making it happen, bro.
Crazy.
Yeah.
Hey, man, that is inspirational. You know what, guys? I'll be honest, we're going to leave it on that, man. We're going to leave it on that, guys. We are going to leave it on that. I have to stop sharing my screen because that is absolutely inspirational. Guys, come on, man. Spam the chat even more. Guys, spam the chat. One more congrats, guys, because he never had the money. He was saying rent or this, and now he's trading with 100K. Spam the chat, guys, in the Discord. Let them know. I want to see flames. I want to see flames everywhere. Spam that. This is crazy. Keep going, guys. Keep going. Bro, well done, man. I'm not going to lie. You kind of got me. Hey, trying to make a grown man cry.
It's been a difficult journey, bro. It's been a difficult journey.
You're here now, bro. Now just focus on making that 10%.
Yeah, it's been a difficult journey, bro. you know, when you're living in London and rent, bro, is like 1,100 a month, bro, and you know,
Tell me
married,
about it.
expecting as well. You know what I mean, bro?
Tell
It's
me
just
about it,
trial
Kwan.
after trial, bro. And it's like, you know, I've been rejected of interviews, not getting a job. But I feel like this was a sign that I just have to keep grinding, just make a way out, bro. That's
Hey,
it.
well done, my bro, man. But now you're funded. Get that withdrawal, my
Yeah,
bro. That's the next step
yeah.
now. You get that withdrawal,
That's the thing, bro.
and you become
It's
another
just my
Arsene
psychology,
2.0.
bro. It's just the psychology. That's what I want to ask you. It's just like
That's it.
I'm in profit, bro, and I just want to close it. I'm scared it's gonna go in minus. But yeah,
How
like
much
you
you in
said,
profit
bro,
by? If you don't mind me asking.
this week,
Yeah, in terms of percent.
600 pounds.
Okay, now keep going.
Yeah.
Focus on, remember, and this is one tip I'll give you, because the markets have just started moving normal again. So
Yeah.
focus on getting that RR now. That one,
Yeah.
you know, 1 to 8, 1 to 10, 1 to 8, whatever it is, 1 to 10 minimum. That's 10%, bro. That's 10K you'll make straight.
Yeah, that's what I'm
Yeah.
working on. That's like,
And that's one thing I'll do. Once you enter the trade, follow, trust me, bro. If you want to succeed with this account, enter the trade, lock your phone, come back in 2 hours and monitor it. Once you monitor it, lock it again, come back in another 2 hours.
yeah, bro. Thank you, bro.
Trust me, bro. Yeah. All right,
Thank
guys,
you.
we're gonna end the Zoom call there. No more questions for now. We're gonna start doing the one-to-ones from Monday, like we said. And for the one-to-ones, just check the announcements. Okay, check the announcements. And yeah, thank you guys so much. The Zoom call will be uploaded as soon as it converts. I'm gonna send it to Saleh. That's how it works. So it converts. I send it to Saleh, and Saleh uploads it. Take care, guys. Have a lovely day. And yeah, go in on the markets from Monday onwards, and I'm back in the markets from Monday.